Hey guys, today is Friday, May 29th, 2020. This is my second video. It seems that there is a lot of news that's coming out uh, in United States and also in Asia. So in my last video, I talked about some of the implication of the Hong Kong um, protest and the Hong Kong pro-democracy movement. And instability and how that could possibly impact the financial market. So right now I'm getting a lot of breaking news. There's a CNN right now. You can see that the protest due to uh, you know due to George Floyd um, is getting more widespread across the nation. So I've been looking at YouTube live streams, all that stuff. So this protest is probably getting more widespread, and probably if Hong Kong is a example in the past, it's probably going to last for at least several weeks or even a month or two. And usually the protest in United States, from what I've seen historically, it's more violent than the Asian countries. I think the reason is just people are more active in the States, and I don't know how to say this. Like, people work out in the States more, and I think they're more active, they're more violent, they can do more damage than the average Hong Kong person in Hong Kong. I guess that's what I see. Like, more people more people in the West, in North America. Like, we all work out. We have a much stronger physique, I guess. And when we go protest, when we do stuff like that, and when we unleash our angers. We get more violent than these Asian countries, I guess. And also, like, people have guns, right? People have all the other stuff, and they throw rocks. They might use real guns if this thing escalates. And the other thing is, what can I say here? The other thing is, with the coronavirus, the United States is being hit the hardest. Right now, we have 100,000 deaths and more than 1 million infected, and it's putting a lot of financial strains on almost everybody. Then this thing comes up, the George Floyd incident just came up, and this is just a spark, kind of a flashing point that is igniting the angers and amount the general population, right? There are a lot of people who they lost their jobs. The unemployment rate is extremely high right now, and just a lot of people are hopeless, and they have no income, and they don't see the future, and they got nothing to lose. When a population have nothing to lose, they would just go on the street and protest and do a lot of damage, even looting, and especially young people they have nothing to lose. They just go on the street. Okay, and we can see that this thing is getting widespread across the city, and it's escalating very, very quickly. Right, a couple of days ago it was just in Minneapolis. Now we spread to New York, Denver, Atlanta, almost everywhere. And I don't think the president should really focus on maintaining the order of the nation. They should really, I don't know what the president's doing. Why are they? I don't know. Why are they taking on China right now? The USA is much weaker than the USA before March, before the virus hit. Why don't we wait for 6 months, wait for 10 months, then we deal with China, right? why are they doing this right now? Like, why are they doing this kind of action against China right now? It just really doesn't make any sense to me. It's just terrible strategy. Doesn't Trump, like, I remember, like, I even read his book, right? He likes to work from the position of strength in his Art of Deal. That's what he said in the book, but he's not doing that right now. I don't know what's wrong with these guys. He is not talking by his book. Literally in the Art of Deal, he implies that he likes to negotiate from a position of strength. This is like a common thing, right? It's not a rocket science that right now United States is not in a position of strength. Take care of the nation first, then deal with the outsiders, the enemies, all that stuff, right? Okay, so the protest, what's that going to imply? What's the implication of this to the stock market? Well, I think the stimulus bill, the number 2, the round 2 is definitely going to be passed by the Congress because of this event. Okay, the stimulus bill is going to be passed. This is going to be, almost 100% is going to happen. The round 2 is going to be passed probably next week or the week after. It's going to be passed for sure. It's going to go through Congress, and that is going to provide another $2 trillion, $3 trillion, $2 trillion, whatever, liquidity to the market, and that is actually bullish to the market. In my previous video, if you go watch it, I talk about the market is driven by liquidity. The short-term performance of the market is driven by liquidity. The long-term is driven by economy. So if the market deviates from economy too much, eventually it's going to mean reverse back to the real economy, the state of real economy. But right now, because the Federal Reserve, this thing's going to be passed, you have another $3 trillion that's going to be printed out, being distributed right into the economy, and that 50% of that is probably going to leak right back into the market. So that's going to absolutely boost the market in the short term. So there's absolutely nothing bearish about the market. So this is second level thinking, right? Third level thinking, tertiary thinking here. If you are looking at the protests, you're looking at violence, you're probably thinking this is bad for the economy, bad for the market's going to drop. But if you think through about this, is that the stimulus bill is going to be passed for sure. So in the short term, it's actually bullish for the market. I know the market doesn't care about these guys. I know it sounds crude, but the market is driven by liquidity. It's not driven by a bunch of guys going on the street and protest and damaging properties. In the short term, this is more important. Okay, $3 trillion liquidities pump into the market is going to pump it up, and these guys damaging the properties, going on the street, break some windows, burn some police stations, is not going to affect the market that much, because these guys are not going to be doing a $3 trillion damage. Okay, and once we have a $3 trillion surplus in the economy, that's going to help the market by a huge amount in the short term, though. In the short term, so definitely do not short the market right now. If you're not long the market right now, definitely do not short the market. Shorting the market is not gonna. It's just gonna make you lose money. Okay. And you might end up going on the street and protesting because you lost so much money. Okay, and that's it. That's all I want to say. And hope you guys enjoy your night, enjoy your weekend. Stay safe. Talk later.